Hey crypto friends, for those of you who are new to my channel, my name is Garrett and welcome to Altcoin Radar. In today's educational trading video, you guys are going to learn all about how to use the EMA indicator while trading the crypto market. Now, for those of you who are new to the channel, if you're interested in trading and would like to try out the same crypto exchange that I've been using for the last 4 years, feel free to go ahead and check out the MEXC exchange with the link in the video description down below. Now, there's two reasons why I love this exchange. The first one is I'm a huge altcoin nerd and they've got all kinds of different altcoins for me to be able to trade at any given time or buy at any time, and they also have some of the lowest trading fees in the entire industry right now, which is nice because you get to keep more of your profits. Now, you're probably seeing this big red bar up here. If you are based in the United States or in Canada as well, I think you will not be able to sign up to MEXC, and the reason why is because when the SEC started to sue all kinds of different exchanges for bullshit reasons, a lot of these exchanges started restricting United States users from being able to sign up, which kind of sucks, but I mean, it is what it is, and hopefully they'll be able to open it up again at some point in time. The only reason I'm able to still use it is because I signed up 4 years ago and I did not do KYC, so I'm still able to use it. All right. So guys, in the world of crypto trading, having the right tools at your disposal is absolutely essential. And my goal here is to help people. My goal here is and always has been to help people to be able to understand these tools on a deeper level in a very simplistic manner so that they can trade with them much easier. So this is why we're going to talk about the EMA indicator today. The exponential moving average, or EMA indicator, is an extremely powerful tool that can provide valuable insights into market trends and potential entry and exit points as well. Now, if you're not familiar with what the EMA actually is, it's basically a type of moving average that places greater weight on recent price data, which makes it more responsive to current conditions. It's basically calculated by giving more significance to recent prices, smoothing out the data, and providing a more clear representation of the current trend on whatever time frame you're using. So how can you use it in trading? There's basically 4 different ways that you can utilize the EMAs, and I'll briefly describe each of them and show you examples on how you can use them on your own charts as well. All right. So the first way that you can use the EMAs, well, first of all, if you don't know how to add the EMA indicator, basically what you do is you're going to go to indicators up here and you're just going to type in EMA. All right. Now, I usually like to choose this one, the EMA 20, 50, 100, and 200, because it gives me multiple different periods to choose from. And the reason why I choose this one is because I always typically use the 50 period and the 200 period at the same time, which is what you see here. I've got my 200 period in pink, and I've got my 50 period in blue. All right. So that is what you do, and that is how you can do that. Now, in the settings, if you don't know anything about the settings, you just click on settings, and to take out, if you just want to use the 50 and the 200 also, you just simply uncheck these two, uncheck the 20 and uncheck the 100. All right, and then you just click OK, change them to whatever colors you want, whatever, and there you go. So back to the education. The first way is by identifying the direction of a trend. Basically, you guys, when you've got an uptrend or when you've got an upward sloping EMA, it typically indicates an uptrend, and a downsloping EMA indicates a downtrend, obviously. And if you combine different EMAs, such as the 50 and the 200, like you see here, it can help confirm the overall strength of these trends as well. So I will go ahead and show you that real quick. It's basically self-explanatory. I mean, as you guys can clearly see, we've got extremely high sloping upward EMAs, which obviously signifies, okay, we were in a giant bull trend there. And when we started going down, you can clearly see that the EMAs started to, well, we ended up having a kind of like a, I guess you could say a quote unquote death cross here. And we've got 2 sloping ones here as well, all right, which obviously signifies, we're going down, all right? So that is what I'm talking about here as far as being able to identify the direction of a trend, all right? Now, the next solid way that you can use the EMA indicator is to identify EMA crossovers, okay? How this works is, if you're using the 50 and the 200 period EMAs, you can look for crossovers between them as potential entry and exit signals. Basically, a bullish crossover A bullish crossover will occur when the 50 period EMA crosses above the 200 period EMA, indicating a potential upward price movement. And the same goes for the opposite direction as well. For those of you trading crypto futures, or for those of you who are trading crypto futures and are looking for shorting opportunities, that is what you're going to want to use. Okay, so. Let's see here. We're going to go to the daily chart because honestly, realistically, in my personal opinion, I have found that EMAs, I mean, they're good on pretty much all time frames. I personally like them most on with longer term trends. Okay, so when we are looking at this here, you can clearly see. We're going to go to a golden cross here. All right, we'll go to a golden cross here, and as you guys can clearly see, we've got the cross going right here. All right, we clearly got the cross going right here. If you were to end up buying right in there, you would have bought right in here, and obviously, yes, it did end up going down again, but it did end up rising like crazy after that. So if you did end up buying here, let's say you bought right here and you held it, or you held it onto the trade until roughly right around in this area, you would have made roughly around 25-26% in profits. But if you're trading the crypto futures market and using like 5x leverage or something like that, hey, you would have made roughly around 100% profits right there, so which is pretty darn huge. Again, we're looking at the daily chart here. Now, as far as a gold or a bearish cross is concerned, let me see if I can find one. Let me make this a little smaller here. So yeah, here we've got a cross, and as you guys can clearly see here, we've got a death cross. All right, now if you were to end up buying right here, you would have ended up buying right down in here. And if you would have only stayed in this for a short period of time and only sold or only stayed in it for, a couple, maybe like a couple weeks or something like that, which is a longer term swing trade, you would have made roughly about a good 17% or so, which is pretty darn solid, to be honest with you. That is a good solid trade right there over the course of 2 weeks. And if you're using 5 or 10x leverage, that's roughly going to be about a 100 to 200% gain right there, which is extremely solid. Now, if you were to if you ended up position trading this and ended up following the EMAs all the way down, oh boy, you would have made some huge profits, you guys. I mean, you would have been down there, and let's see here, we got 62%. I mean, if you were to hold that on for, the long term, I mean, we're talking almost a year here. I mean, because we got 304 bars, 365 days in a year, 304 days, whatever. You would have made a lot of money, to be honest with you. You would have made a ton of money. So yeah, that is overall how you can trade the different crosses. Now we'll go to the 1 hour chart and we'll take a look at that. Take a look at it there as well, because that's also worth looking at too. So if you were to do this on the 1 hour chart, even, I'm just showing you an example on the different chart levels so that you can see that it works on all kinds of different charts. Okay, but if you were to end up trading this cross right here and you were to end up buying in right in here, you would have made roughly around, if you would have held on to it, till right around here or something, you would have made roughly a good solid 4.5 to 5% or so, which within the span of a 2-day and 20-hour period, that's a good solid gain, especially if you're using like 10x leverage. That's roughly a good 40% gain right there within 2.5 days alone. All right, so that is what I'm talking about as far as being able to profit with EMA crossovers. All right, now another way that you can utilize the EMA indicator is by identifying support and resistance levels as well. All right, basically when price approaches or bounces off of an EMA, it can signal potential reversal points. For example, if the price bounces off the 50 period EMA during an uptrend, it may suggest a continuation of the bullish trend that it's currently in. All right, so let me go ahead and find an example of this. We'll go back to, we'll check out the 4 hour chart first. So yeah, we are sitting on the 4 hour chart right now, and let's see here. What we want to see here, you guys, is we want to see, for instance, right here in this section right here, this current 4 hour candle that we're in. Let me just make this a little bigger so it's easier to see. But this current 4 hour candle that we're currently in, what would be awesome here is it would be awesome to see this candle bounce off of these two moving averages. Okay, if that ends up happening and we get a new candle going up here, then these two are going to end up crossing again, and we're going to end up hopefully starting a new uptrend here, okay? And that is how you can be able to tell different support and resistance levels. So we clearly, especially since these two moving averages are so close together right now, that is a clear, good, solid level for support right there, okay? So we can call this a good support level right now. Again, if we end up going above it, or if we end up staying above it, it means we're basically bouncing off of support. If we end up dropping below it, we're going to pretty much signals that we've broken through support and we're headed lower, okay? So that is overall how you can use the EMA indicator to signify if things are, you know, what do you call it? That's how you can use them as support and resistance levels. Now, the last way that you can use the EMA is by identifying trend reversals, okay? With this one, you want to watch for changes in the slope of the EMA itself. Basically, a flattening or reversal in direction of the EMA may indicate that a potential trend change is coming, okay? And I'll also note here that you'll also want to use other indicators to confirm these trend reversals as well, and I'll show you that also, okay? So if we go ahead and look at this, you can tell that we've got a flattening EMA, all right? On both EMAs, they're both pretty flat. That pretty much tells us that a change in direction is going to be happening here soon, all right? So now we're gonna go ahead and look at a different indicator. We're just gonna pull up the RSI here and check it out, all right? So if we pull up the RSI here, we can clearly see that we are currently above the neutral zone, and we are right at this moving average right here on the RSI. And if we end up crossing above that, oh boy, guys, we're probably going to end up continuing into a uptrend here, which would be very, very nice. And that is kind of the reversal here that I'm talking about, because we just spent a little bit of time going downwards. But it would be nice to see us reverse direction and start going upwards again. So that is pretty much how you can use EMAs to identify various trend reversals as well, okay? So overall here, guys, the EMA indicator is an extremely good tool that can significantly enhance your ability to trade the crypto market. By understanding the different trends, crossovers, and support and resistance levels provided by the EMA, you will be able to make solid decisions and increase your precision of your trades as well. But remember though, successful trading requires a combination of technical analysis, risk management, and a commitment to continuous learning. And I cannot stress this one enough, all right? As someone like me who focuses on educating people, you need to take the time to learn on a continual basis if you want to be a good trader someday. Because entering trades blind without a plan quite literally never works on a consistent basis, and you will end up losing money that way, okay? So now, if any of you guys have any questions about anything that I mentioned in this video or anything that's related to altcoins or trading in general, feel free to either leave a comment down below or feel free to reach out to me in my free community Discord server, which you can find a link to that in the description below this video as well. But overall here, you guys, that's going to pretty much do it for this video. So I will go ahead and wrap this one up. But before you guys leave, if you haven't already and you would like to, go ahead and make sure to subscribe to the channel so that you never miss a new crypto and altcoin video from me on a regular basis. And hey guys, with that said, thanks for watching.